Hey everyone, welcome back to the channel, UtahLowRate.com. Wanted to go over a few things today about self-employed buyers. I know this is a big subject. A lot of banks have trouble with these. A lot of banks and lenders just don't understand how to correctly calculate the income for self-employed people. It's not a matter of just taking the average of the 2 years income and throwing it out there. There's so many different options and other things that we, as experts in the field that have had decades and decades of experience in this field, understand how to properly calculate self-employed income, whether it be from your typical self-employed person to your 1099 borrower. There's many different aspects to self-employed and different payments and ways you guys get paid, and we understand all the write-offs and the different businesses to get rid of write-offs and take advantage of not paying income tax. We understand that. So that's kind of what I specialize in. I want to go over this with you and let's get into it. So most self-employed borrowers can be very complicated and can vary from year to year, okay? Most have tax write-offs that they take advantage of. In some cases can shrink your usable income when you're trying to buy a house or applying for a home loan. So what I want to do is I want to educate you guys today on how to correctly calculate income. And after this video, if you don't feel comfortable calculating your income, you want to get pre-approved, feel free to reach out to me anytime. I'm always available. I'd be happy to get you pre-approved, look at your application, look over your tax returns, and kind of tell you what you're going to be able to take advantage of as far as income limits and what other options we can offer, things like that. So let's kind of get into the basics and then we can kind of work off from there. So you want to deal with a mortgage broker usually that has more extensive experience in understanding self-employed income guidelines and knows how to read and calculate income correctly. Most banks and lenders do not specialize in self-employment income, as some buyers may have multiple businesses and some may have multiple rental properties, maybe in an LLC, maybe not. This can get confusing for loan officers that don't do this on a regular basis. I just closed a couple of these a month ago where 4 other banks and mortgage brokers and lenders did not understand how to read and calculate the income guidelines, the tax returns for the self-employed person. Actually, for a couple self-employed people that I did loans for. One guy told my borrower that he may qualify for a $400,000 house, and he's been self-employed for 25 years. I actually just got him approved and closed on a house for $700,000. So the one guy that actually looked at the tax returns, apparently he doesn't do self-employment because he was about $300,000 off of what this guy could get approved for. And I'll get into that later and explain how we were able to get him approved for that. So I actually have 25 years experience approving and calculating self-employed income correctly. So let's get into what options you may have when calculating income. We traditionally use 2 years tax returns and take an average of those 2 years tax returns after all write-offs and calculate your income when you're self-employed, okay? Now also keep in mind, if your most recent year actually has lower income from the previous year, they call that declining income. So in that instance, what they're going to do is they're not going to let you use the previous year in that calculation. They're going to make you use that lower income year, the most recent tax return, and they're going to make you take a 12-month average of that. So your income's not going to calculate out as high as it would have if you would have used the previous year's income. Even though it was higher, I know it's frustrating. You just can't use that because guidelines don't allow for that. Now, if you have lower income 1 year and then the most recent year you have higher income, even if it's $100,000 more, they're not going to just let you take that most recent tax return because you had increasing income. So in that instance, they're going to make you calculate over a 24-month period and take that 2-year average, okay? Now keep in mind, you will be able to add back in a few things, but we'll go over that in a few minutes. So The one way around using a 2-year average, whether it's going to help you or hurt you, we do have other options with this, okay? So if you've been in business for 5 years or more and we get an automated approval, and the automated approval allows you to use the most recent tax returns for 12 months, I don't have to show them that previous year. I can use the most recent year, calculate you off a 12-month income as long as you've been in business for 5 years or more, and we get the automated approval that asks for that specifically. So now one other thing I want to share with you on this is when you're self-employed, and a lot of people on their business tax return will claim depreciation, even though that's been written off your total federally calculated what you're paying taxes on income on the front page of your personal tax return. I can add back that depreciation back in on top of your income, even though it was written off. So that's something cool that I think a lot of lenders miss. And the guy that I was just telling you about a little while ago, he actually missed this and didn't understand to add that back in. So not sure how many years he's been in business, but there's quite a few lenders. I run across this a lot. I fix a lot of loans. I fix a lot of problems for people. You can check out my reviews online. Everybody on there just raves about how I fixed their loan, how I got their loan done. You know, great reviews online. Go read those. It's under utahlowrate.com. So some buyers may have too many write-offs and they only show a small amount of income for the last 1 to 2 years, and tax returns are not going to be an option for them, okay? So I've got some other alternative loan programs for self-employed people that are going to help you get into a house, even if you're just temporarily trying to get into a house right now because maybe you're halfway through the year and this year's tax return is going to look a lot better, and you have been in the business for more than 5 years, and you think this year's tax return will be able to qualify you for that house we're going to buy. I'm going to show you some alternative products that we can get you into. So first product is we've got a bank statement loan product. We can use anywhere from 12 to 24 months of either personal or business bank statements. Now this product with me only requires proof that you've been self-employed up to 1.5 years. Most products that you're going to run into with most banks, they're going to require a 2-year history to use a bank statement loan for self-employed people. So this is where I have an advantage over most banks. So keep in mind when using business bank statements for this loan, they're going to take all of your deposits and they're automatically going to minus 50% of those calculating for write-offs, okay? There's one way around this. So if you get your CPA to write a letter stating that you only write off 10%, 15%, 25%, then that's all we have to deduct. As long as you can get your CPA to write that letter and send that over to us, then we don't have to deduct that 50% off those business bank statements. Now, if you, and I've ran into this before, if you use 12 to 24 months of personal bank statements and you're self-employed, then we don't have to deduct anything from the personal bank statements. So a little change from using the business loans or using the business bank statements to using personal bank statements. So that's one advantage. If you put all your deposits through your personal account, that's going to fare better for you. We don't need to get the letter from the CPA at that point, okay? So I've actually got three other products that we're going to go over. So the next product is going to be a profit and loss unaudited home loan. So what this is you or your CPA, either one, this is unaudited, so I don't need it audited by the IRS, is you guys can prepare a profit and loss without showing tax returns. Same as the bank statement program. We're not showing tax returns on any of these products, okay? So on this profit and loss, you can get a signed unaudited profit and loss that you guys prepare on your own. What they will ask for that is you will need to provide your most recent 3 months of business bank statements to back up the income that you're stating on that profit and loss to go along with that. So that's the one caveat to doing the profit and loss loan program. And the minimum score on that is a 620 On the bank statement program, you're going to need a 660 or better for a credit score on that product. And then we do have one other product that I'm really impressed with. I've used this quite a few times. It's an easy breezy loan. A lot of people love this, and it's kind of an in-between loan. Maybe the rate's a little bit higher, but it's the super easiest loan you can get into. So this one, anybody can qualify. It doesn't matter if you're self-employed, non-employed, doesn't matter. So this one's a no income, no employment, and this one's going to start at a 640 credit score. So in this product, we don't want to see any employment on the application. We don't want to see any income. So this is not a stated income. This is no income, no employment. Starts at a 640 credit score. So that depending on what your credit score is, they're going to have certain down payment restrictions or certain requirements on what you're allowed to do. So let's go over the options on this. So if you have a 640 to a 659 credit score, you're going to need 35% down. And they're going to require 24 months in reserves outside of your down payment. Now keep in mind on this product, you can get a gift for down payment and you can get a gift for reserves. So that's awesome because they do allow for that. You just have to have your own reserves. You can't get a gift for the reserves, just the down payment and the closing costs. So reserves have to be your own funds, and you have to prove those. So you're going to need 24 months reserves with that first slot at 640 to 659. From 660 to 679 credit score, you're going to need 30% down and 18 months reserves. And then 680 to 699, 25% down payment, which can be a gift for that and the closing costs. You will need 15 months reserves for that option. Now, if you have a 700 score to a 739 credit score, you'll only have to do a 20% down payment and you'll have a 12-month reserve requirement. So whatever that payment is, you'll need 12 months of that for that reserve requirement, okay? Last option for this is a 740 plus credit score. You only have to do 20% down and you only need 3 months reserves to meet the guideline for this option. So these options are awesome. Whether you're showing tax returns, you just have questions, you want me to analyze your stuff, reach out to me. I'm always available. I'd be happy to analyze your tax returns, see if we can't get you pre-approved. And if that doesn't work for you, we've got 4 or 5 other options that we can put you on, and we'll get you a loan, and we'll exhaust every loan program out there to get you approved to buy a house. So reach out to us. If you like this information, feel free to subscribe, smash that like button, leave me any comments down below. If you have any questions or you just have any comments for me, I'll be happy to reach out to you at any time. We'll see you in the next video. Thank you.